Today, we're going to be talking about US inflation and the implications for interest rates. Good morning and welcome to Morning Markets. Yesterday, we had the release of US inflation numbers for August. These showed headline inflation at 2.5% on the annual measure. To provide a bit of context, that compares to a peak in inflation in June 22 of just over 9%. 2.5% is broadly in line with the Fed's inflation target, and that's important because the Federal Reserve meets next week to decide on whether to cut interest rates. Market expectations are currently for the Fed to cut by at least 1/4 point. And that's just the beginning, because market expectations also show interest rates being cut from 5.5% currently to just under 3% by the end of next year. To provide a bit of global context, we have the European Central Bank meeting today when they're expected to cut interest rates by 1/4 point. That's the second cut, having already cut interest rates a couple of months ago. The Bank of England are also meeting next week. They're not expected to cut interest rates at that meeting, but they have also already cut interest rates by 1/4 point and are expected to cut interest rates by one or two more times before the end of this year. This turnaround in inflation and the implications for interest rates is really important for markets, particularly equity markets. It comes against a background of gently softening growth, so interest rates are being cut because inflation is falling. So they're being cut for good reasons, and that's been a positive influence on particularly equity markets. Equity markets responded well yesterday with the S&P in the US, for example, up just over 1%. That's it from me. Thank you for listening, and please join us for the Week in Markets tomorrow. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.